Alright, so I said I was going to send you another video on mitigation, and I realized I haven't done that yet. So while going through Gold this morning, I saw something interesting that I felt I should share with you. So now you can see that all the way from here, we've had price being bullish at this point here, this high. From here we took out this high, went high like this, price tapped into here, price went up, had a new structure there. And then now we had price sweep this high. Okay, we had price sweep this high and then come in here and tap into this zone, or especially this particular area. Price tap into here. And after that, we saw that price started going back, and we saw that there was a mitigation of the demand that was on a candle around here. So this one was this candle. So price mitigated demand on that one. And with that, we realize that we are now bullish because why? Normally, we should expect that price should come and sweep whatever low that was responsible for giving us a liquidity high. And yes, price swept it. Which was this? Price swept it. Which was this? Price swept it. Then next thing we will expect is that, okay, since price has already swept the low and we've tapped into demand, and this particular high has failed to break structure to the downside, then the next thing to expect is that price will come and take this high. Okay, the price will come and take this high. And with all of the things that we've had here, we've seen that price has come here, tapped into, mitigated and tapped into the demand that was here, and then we moved up from there. And now we've taken out this high, So the next best thing to expect is, okay, let's see, the price come into another demand here and move on from there, because why? This one has already mitigated this. So we should expect that, okay, at some point price will pick an area of demand, some demand kind of candle, and then move on from there. So we have this as a something that signifies buy volume. So we were buying and it was an heavy buy, and so we had this happen and then we took out this high. So if we were able to take out this high, then that means there was some form of demand somewhere that price was reacting from, and that means that we have to have price come back into demand and move on. So now looking on higher time frame, because that is what I like to do. Looking on higher time frame, you see that the price on the daily time frame had been reacting around here. So we had all of this happen. We had price go up here. We had price react to a supply and come down and still close bullish. Then we had price open, try to buy, fail, and then sell down into this place, and then bought up again. And now we now have price tapping into some form of demand here and then going up to buy. So the next thing is to expect price tapping into further demand, which will be on the candle from which that bullish candle came from. So you should expect that price come into the demand and then move on from there. So what do we see here? We see that price has already tapped the air according to what we know. That's already tapped here. That's already tapped here. It has tapped in here, gone here, tapped here, gone up here, tapped into this, went up here, and went up here. So now, according to what we see here, we realize that there was a form of supply that was here. All right. There was a form of supply around here. Price was reacting to. When price reacted to it, at some point it had to take it out and then it went up. Okay. So it went up. And after it went up, we should expect that price should come back somewhere and pick up, and then we can have maybe some form of demand here. Because now this supply that was here has now become and this one has already taken out the supply there. So we should expect that price should come into that same area and pay and tap into the demand that is there. Tap into the demand that is there. So we have price tap into this, went up, and then we have all of this happening. Which was 3rd of October 3:30. We have all of this happening. So next thing is to expect that okay, we should move up. But in this kind of situation, we see that price is still reacting from one kind of supply. You see that here, it's still reacting from one kind of supply. And so now that we're expecting a push, let's see to expect that okay, price should move up. This is this. So the next best thing is to expect that price should move up. And now we see that we've taken out this high. I hope you can see that we had some reaction here. There was a supply candle here. We can probably see it on higher time frame. So we reacted here. Price came again, and this particular candle, this one, reacted here again before we pushed. Before before we actually pushed. Although this one reacted from the same supply, this one came into it, and then this one tapped the one that came into it, and then we went up and swept the high. But now you see that this one has not touched into real demand yet, because we still have a zone here that pushed price. We had this one buy here. We had this one we have from the buy from the sell, and then it still held its ground, and then we had this one sell all the way down here and buy. Okay, so this is the candle now that is holding volume, holding buy volume, and we have not mitigated it properly yet. So we should expect that price should mitigate it properly. And what will we use as inducement? This one, this particular one that was here. That's what it will use as volume, as inducement, sorry, into this zone. Okay, it's very important that we take care and make sure that okay, we have our zone covered. Although you could say that this one will also be used as liquidity, but we are picking this zone because why? This is the area where the whole thing happened. So we will say that okay, we use this as inducement, and then we'll come here and tap and continue. Because this is the candle carrying volume. Every candle that moves up taps into the previous candle to find the demand in that previous candle before it can move upward or downward. So now in this case, that is what we have. And so we would expect that this high will be taken. And so we can place our position, pick that, and then go up here. From there, I believe we will now move from there. That's it around. So we can move from there and See what price does. So you can see that immediately price came, used this as inducement, tapped into this zone and started moving up. So this is an example of price mitigating several candles to move up and into demand. So the price just goes ahead and takes out this high. So we've taken out this high now in this case, and the next thing is to expect a new structure. So that is what SAUUSD has done. So I just wanted you to see how we can make use of mitigation, make use of market structure, make use of liquidity all in all to be able to get an entry. So I'll send you the pictures of trades that you should look at and predict what is going to happen with them. I'll send it to you soon so that you can have a look at them. So I hope you've been able to discover from here how we were able to mitigate into demand, and we were able to use the candle that mitigated demand from here, and we were able to use that candle as our entry to buy. So that's what price did. Mitigated this candle, transfer demand, and then we had demand line here. So that is just it.